Thank you everyone for joining. Before we begin detailed testing, could finance provide an overview of the hotel's current control environment?
Certainly. Overall, the hotel maintains a structured internal control framework aligned with Marriott policies and corporate compliance standards. Key financial processes, including procurement, accounts payable, payroll, and revenue recognition, are supported by documented approval procedures and system controls. We also conduct periodic internal reviews to monitor policy adherence and identify operational risks proactively. That said, we recognize there are areas requiring further improvement, particularly around documentation consistency and approval timelines.
What are the most common audit findings typically seen in hotel operations?
In hospitality environments, the most common findings usually involve procedural compliance rather than intentional misconduct. Examples often include incomplete supporting documents, delayed approvals, inventory variances, overtime authorization gaps, and inconsistencies in procurement documentation. Cash handling procedures and system access controls are also areas that require continuous monitoring due to operational complexity and high transaction volume. In most cases, the focus is strengthening process discipline and reinforcing accountability across departments.
How do you normally prepare operational departments before an audit?
Preparation starts well before the audit itself. Finance typically conducts pre-audit reviews with department heads to verify that supporting documents, approvals, and reconciliations are complete and properly organized. We also remind teams about policy compliance, documentation standards, and the importance of maintaining a clear audit trail. In addition, departments are encouraged to communicate transparently during the audit process rather than becoming defensive. The objective is preparation and accuracy, not simply passing the audit.
Which internal controls do you consider most critical in hotel operations?
From my perspective, several controls are absolutely critical. First, segregation of duties is essential to reduce fraud exposure and operational risk. Second, approval controls for purchasing, payments, and payroll help ensure financial accountability. Third, inventory and cash controls are particularly important due to the high transaction volume within hospitality operations. Finally, system access management is increasingly critical to protect financial data integrity and compliance.
How should staff respond during audit interviews?
Staff should respond professionally, honestly, and directly. It's important that employees answer based on actual operational practices rather than what they believe auditors want to hear. If they are uncertain about a process, it is better to clarify rather than speculate. Auditors generally value transparency and consistency more than perfect answers. The key message to staff is, remain cooperative, factual, and calm throughout the process.
Have you ever identified potential fraud risks within hotel operations?
Yes, fraud risk exists in every operational environment, especially in industries with high transaction volumes such as hospitality. Common risk areas include cash handling, procurement collusion, inventory manipulation, unauthorized discounts, and payroll irregularities. While we have not identified any major fraud cases recently, we continuously monitor unusual transactions, approval exceptions, and operational variances. Strong internal controls, management oversight, and data analysis remain critical components of fraud prevention.
We identified missing supporting invoices in several AP files. How would you address this issue?
We take documentation compliance very seriously. Based on our preliminary review, the issue appears to be related primarily to filing discipline rather than unauthorized transactions. Nevertheless, corrective actions are already being implemented, including stricter document verification procedures and additional follow-up by accounts payable supervisors. We will also reinforce departmental accountability to ensure supporting documentation is consistently maintained moving forward.
Why were approvals delayed?
The delays were primarily caused by a combination of operational workload pressure, cross-department coordination gaps, and timing issues within the approval workflow. During high occupancy periods, some operational approvals were prioritized reactively rather than through the standard process timeline. In addition, certain supporting documents were submitted later than expected, which affected review completion. However, we are currently strengthening approval tracking visibility and communication procedures to improve processing discipline and turnaround time moving forward.
Who is responsible for monitoring compliance?
Compliance responsibility should be shared across departments rather than managed solely by finance or internal audit. Operational department heads are responsible for ensuring procedures are followed within their respective areas, while finance and internal audit provide oversight, reporting, and control monitoring support. Leadership alignment and communication are extremely important because effective compliance depends heavily on operational discipline and accountability culture. Ultimately, compliance should be viewed as part of daily business operations rather than only an audit requirement.
How frequently are internal reviews conducted?
Internal reviews are conducted regularly throughout the year based on operational risk level, audit priority, and business activity. Certain high-risk areas such as cash handling, procurement, payroll, and inventory controls may require more frequent review cycles. In addition to scheduled audits, periodic spot checks and operational compliance reviews are also important for maintaining control visibility. The objective is identifying risks proactively and supporting continuous operational improvement.
Are there any serious compliance risks?
At this stage, there are no indications of material compliance breaches that would significantly threaten business continuity or financial stability. However, some procedural inconsistencies and approval control gaps have been identified, particularly during periods of high operational pressure. While these issues are manageable, they still require attention because repeated control weaknesses may increase operational and reputational risk over time. We are therefore strengthening monitoring procedures and reinforcing accountability across departments.
Could these findings impact brand standards?
Potentially, yes, particularly if operational inconsistencies begin affecting guest experience, reporting accuracy, or procedural discipline. In branded hospitality environments, compliance and operational standards are closely connected because consistency directly influences brand reputation and guest trust. Fortunately, the current findings appear operationally manageable, but timely corrective action is still important to prevent escalation. Strong internal controls help protect both financial integrity and long-term brand positioning.
Do we need stronger controls? I believe some controls can be strengthened further, particularly in approval workflow visibility, documentation consistency, and escalation procedures. However, controls should remain operationally practical and not create unnecessary administrative burden. The objective is balancing governance, operational efficiency, and accountability.
In hospitality environments, effective controls should support operational discipline while still allowing departments enough flexibility to respond quickly to business needs.